All right, we're going to take a look now at the stock market. We're going to look at the SPX on the weekly chart, do a 1 to 3 month view. We'll talk about what our expectations were and what the projections look like, what the best case is, what a likely case is, and why we believe that the second half of the year is going to be problems for the equity markets and where it is likely that peak will come. So we're going to switch over now and we're going to move over to the SPX market. So in here, once this stops buffering, there you go, are some important cycle patterns. Now I'm going to let you see I'm going to go way back over here into 2015 through 2017 right here. And I want you to see that there is a big dominant cycle right over there that bottoms way over here, and you saw that brought the big break right at that point. And then this cycle right over here that actually bottomed right here in what was a very strong market. Now, if I move forward and I want to look at these green dash cycles, you will see how that lined up to this low right over here, and then this a little bit late as we got into the COVID crash. I'm sorry, this was the taper tantrum right in here, which brought you down in 2018. Then when you look at that cycle again, then it lines up to the COVID crash. You can see that really spot on right there. So when's the next time that cycle comes down? Well, that is coming down starting in the summer and then declines here through August, maybe even through the beginning of September. Now, these yellow oval areas are the corrective phases, and that's where the biggest downside risk comes in. It's even bigger when the bigger pattern is coming down along with the minor cycles that you see right there. They're all coming down into this summertime period. So each of those bigger ones give you the bigger declines right through here and right through here and likely right through here. Our anticipation of a decline in that period of risk is projected to a minimum of 11% from the peak. That to me is a bullish call because we believe that it's high probability there will be a market decline, and it's very possible that that decline into August, that after that you get a rebound, and that it does not make a new high. And if that would happen, it would then be the beginning of a bear market. So you see, we need to go a long way out to really understand that. Now let's talk about now as we're looking at a 1 to 3 month view. What we had expected to happen was that we would rally, and you see the momentum positive in here when we look at that on the reversal scout. Look at this cycle right over here. It was so strong the momentum never went neutral even. It just stayed positive right there, and it's positive still right now. So we had this minor cycle correction. We had anticipated it would get down to this level right over here, which was about 40.35. It did not get quite that low. It got down over here to about 40, what was the low right there? 40.56. This low right over here, a little bit higher, about equal, and then we got into a rally. So this is pattern you can see right in there, down, up, down, up. It's exactly what we expected would happen, a decline in May, a rally into June. However, this was, even though it made the 4% that we thought it would decline, it bottomed probably a week early for our overall analysis, and we needed to make some adjustments on the daily charts. So now we look like we're in this rising phase. Right now, this is kind of the proof of life period because the stock market has to continue up in here in this rising phase. Were it to break below those lows, remember 40.56 was that low, then the bull market, this bull phase at least, the top, will have been confirmed and the market will be moving down through August most likely. So the targets, because this is a positively configured cycle, the probabilities of getting over 42.38 are over 70%. And right now we're 42.13, so we're, what are we, 0.75% away. It's pretty likely it's going to make it. So we would anticipate that we would move to a new high. The question is, what does it do when it gets there? You can see the upper track right over here, and we were talking about in the SPY getting up to about 430. Well, this is the bottom of that projection zone right there. We don't have it projected to the top of the fib extension, which would be 4470, because that, in our opinion, would be extremely low odds. It could happen, and if it got much above 4,300, well, we might be looking for that. But right now we're going to look at what we think are the highest probabilities, and that is that it gets to 4238, and then we see how it acts. And if we're able to still have strength through that and hold up pretty nicely, then it could move up here into late June and even early July, where it gets into that area around 43 to 43.25 would be the way that lines up. We have some resistances on the daily chart, which I don't show you here, at 43.25. So that's the zone, 4,300, 43.25, if it can get through there. This is exactly the pattern that we were looking for, with the dip in here and then the movement back up. And so the next 1 to 3 months, in our opinion, are that it will continue to rally, make a higher high. The NASDAQ and Russell may not, because those are weaker indexes, and then begin to turn over. If the market does get to 4,300, then probably the Russell and the NASDAQ will test their highs under those conditions, and then they will all likely roll over at this point. So again, we have gotten past the minor correction. We are now in this rising phase, and it's up to the market and up to the buyers to be able to tell us whether or not they have life left or now. In the beginning of the show, I talked about the fact that bubbles are popping everywhere. Crypto, NFT, SPACs, the coin stock, ARK stock, all of those things, and wild trading in the meme stocks. That's all conditions that are giving us warnings that the stock market, which is extraordinarily overvalued, again, I'll repeat what I said in the beginning of the show, Wilshire 500 versus the GDP is at 1.97, is at 197%. Far, far more overvalued than we had in either 2000 or 2007. So when I say that there's a top coming in here, and I point to the correction down over here, which is about 11% in the first downside move, that is barely touches the overvalued condition. And if bubbles are popping the way I think they are, then the stock market is in for a problem for the second half of the year and into 2022.